afternoon, everyone, and happy Thursday. It's Alyssa Corum here, and I am joined by Ken Shreve for your stock market today. And on the show, we're of course going to be breaking down the overall market conditions today. We did see a bit of red on Wall Street, but we'll give you IBD's take. And Ken, give us a preview of the three stocks that we're going to be analyzing, showing some relative strength.
Yeah, sure thing. Nice, decent close by the Nasdaq. Buyers come in late, so we're happy to see that. But we're going to take a look at Kingsoft, a China-based provider of cloud services. On the heels of great earnings from Target last month, we'll take a look at Target and also home builder Lennar.
Sounds like a plan, but we begin with a look at the major indexes. This is a chart of the Nasdaq Composite. You can see closing down about 1.3% for the day off of the lows, but it was a gap below that 50-day line. A little bit of encouragement towards the end of the session, but what's the main takeaway here for investors?
Well, the main takeaway is it could have been a lot worse. It looks like we'll probably get a distribution day for the Nasdaq. We saw one for the S&P 500 yesterday, a higher volume decline that points to some institutional selling. That's on the heels of the Fed statement yesterday. But I think the fact that we held above the September 11th intraday low, yeah, right there. I mean, that is definitely a positive, and you can see we closed in the upper half of the range. So that tells you there were some buyers around late in the session. So not a great day with a 1.3% decline, but it was a lot worse earlier in the session, and we closed nicely off lows.
Right. And also not really too unexpected. I mean, we couldn't have predicted the big gap down, that we saw in the morning, but the uptrend is under pressure. And even though we did see a little bit of a glimmer of hope, rewinding a couple of sessions back, it's still a good idea to be defensive and protect your portfolio and keep an eye on stocks that are showing relative strength.
Yeah, we shifted our market outlook. That really harsh 3-day decline for the Nasdaq. It was actually the third day there where it closed just below its 50-day moving average. That's where we kind of turned cautious, a little negative on the market. When you get three really heavy down days and with volume like we saw, it usually means that there's probably going to be a little more selling that we're going to have to contend with, and we've seen that. We'll see what tomorrow brings, but we're still at uptrend under pressure right now. But we're going to talk about three stocks today that are, holding up pretty well through this selling.
Yeah, so let's go ahead and take a look with Kingsoft, ticker KC here. It was able to come well off of its intraday lows. Recent IPO forming a base. So we definitely like to keep a pulse on the IPO market. What is speaking to you when you look at this chart?
Well, again, sort of similar to the Nasdaq, you can see its price action today. It fell sharply with the Nasdaq early, but managed to close all the way up near its high for the day. Ended with a loss of just 0.5%. Kingsoft was brought public by J.P. Morgan back in May at $17 a share, so it's more than doubled. You can see down the fundamentals at the bottom here. You've got great top line growth, great revenue growth. It's not profitable yet, but this company, obviously, their cloud services and very strong demand in China. So if we look at the weekly chart, we'll see that this is just a classic, what we call a base, a stock that is just kind of preparing for possibly a move higher. It's going to need a healthy market to do that, but these are the stocks you want to pay attention to when the market's acting a little wobbly. There are a lot of stocks out there showing relative strength. You can see a nice weekly gain so far this week, bullish relative strength line. So there's a lot to like about Kingsoft right now.
All right, sounds great. And Target has also been on our radar in recent weeks, with it coming down to that test of the 21-day line right around when the market did start to come under some more selling pressure, and it has held up really well, now back above even that 10-day line. So looking firm in the face of weakness.
Yeah, no question about it. The retail sector continues to be a top-ranked sector in our database. Target, a big reason why. You can see that bullish gap up last month, and that was because of a very strong earnings report in August. And we look down at the bottom here for the latest reported quarter. You can see that revenue up 25% year over year, earnings up 86%. I think at the time, same store sales were up 24%, and their digital sales tripled. So it was a blowout earnings report. And it's not surprising to see the stock doing pretty well after that gap up. I mean, not many stocks holding support at the 21-day moving average at this point. So we're going to keep an eye out for a new entry here. If the market starts to firm up, this could be one of the first stocks out of the gate.
Yeah, and I really like being able to see all of these fundamental metrics lined up with the price action. I find that to be very helpful. We also have the forward looking estimates here and IBD's proprietary ratings and metrics, this relative strength line that's unique to us. So you get a lot of these great features in MarketSmith, which we have free access week for this week. We'll give you a little more detail at the end of the show. And last stock we want to take a look at, Ken, is Lennar, LEN. We've been talking quite a bit about housing related and the builders, those stocks.
Yes, earlier today we had housing start data and building permit data for August. It was actually disappointing, but really over the past several weeks and even several months, the housing data has been pretty good. It's been a pretty resilient sector in the economy, mostly due to rock bottom, very low interest rates, and of course the Fed said yesterday they're going to keep their Fed funds rate between a range of 0 to 0.25%, most likely through 2023. So that should be a pretty good environment for home builders. Not surprising to see many of them finding support at their 50-day moving average. And again, we switch over to the weekly chart because we like to see both perspectives
Mhm.
here. You can see a recent breakout and just a good solid test of the 10-week moving average. So in a really, really healthy market, in a confirmed uptrend where we're not seeing signs of institutional selling in the indexes, this stock would be actionable right here. But with the uptrend under pressure, we kind of scale back, limit our new buys and wait for the selling to run its course. But this one
Mhm.
is still looking pretty good.
Very good point. Definitely one for your watch list out there. All right, everyone. Thanks so much for tuning in. It is MarketSmith Free Access Week, where you can check out the charts that we use all day, every day on the IBD team on this show, as well as IBD Live, and for our analysis that goes into all of our articles and other content. And you can check them out for yourself at investors.com/MS free access. But a lot of powerful tools that you get with MarketSmith.
Yeah, it's an easy link to remember too. MS free access. And what I say all along, I mean, there's a lot of charting services available out there, but very few, if any, that give you all the fundamental and technical information all in one place. So with MarketSmith charts, you get the last 8 quarters of earnings and sales. You get fund sponsorship data, a
Mhm.
whole slew of information. So just a great research tool.
Right. Everything that you need as a growth investor and those can slim traders following IBD's methodology, it's all right there for you. So we encourage you to check it out this week. Thanks for tuning in, and we'll continue the conversation tomorrow morning on IBD Live. Check it out at investors.com/IBD Live. We'll see you right back here tomorrow.